An unprecedented call, an unprecedented statement from the Treasury Secretary, not because it hasn't been done before, but because it hasn't been done outside of a sharp market move that came with serious concerns about market liquidity. Market observers, we said there's no such concern in the market, and most found the statement unwarranted and even potentially dangerous in and of itself. Here's the Christmas we all got from Washington, that partial government shutdown, reports that Trump was discussing firing Powell. Mnuchin, the Treasury Secretary, issues that, quote, ample liquidity statement is out there when nobody seemed to want it. He also tweeted a quote from President Trump saying he does not believe he has the authority to fire the Fed chairman. And then the Treasury convening this capital markets group to discuss all of this. Now, the history of emergency market statements from the government, they go back at least to 1987 and the market crash there when then Fed Chairman Alan Greenspan famously said the Fed, quote, affirmed today its readiness to serve as a source of liquidity. But that was after a one-day drop of 23% in the Dow, more than the Dow has fallen over a nearly three-month period. Fed officials we've spoken to this morning had no comment on the Treasury's statement or whether there were any liquidity problems out there in the market about which we don't know. And I guess one question I have, guys, is who's advising the Treasury Secretary that told him that these were needed statements?
Communication standpoint, right, Steve?
Yeah, I mean, they're supposed to have people around them in the Treasury Markets Group consulting with the Fed, consulting with people in the markets to say, yeah, we need this statement now. And the trouble is that I can't find anybody who thinks this statement was needed and or prudent.
I think the Powell question, I mean, is also such a big one for us to tackle, Steve. It sounds like even if the president discussed it, I mean, Bloomberg had a report citing 4 officials on background saying that the president is looking into that. It sounds like they think that they don't have the ability or the legal right to do it. Is that true?
What you're pointing out, Sarah, is the notion that they're not denying, as far as I can tell, that the president was exploring this possibility, right? As far as I read the denials, and correct me if I'm wrong here because I've read them, I thought, reasonably carefully, that the denials are about the idea that the president has the right to do it or is considering doing it now. But the idea that he discussed it or considered it recently, I don't think they're denying those press reports, of which, by the way, there were 3 that I counted. So I don't think there's any question about that. And then, you know, the getting into the legal issue of whether or not the president can do that is a real morass right there. I don't think he has that possibility to dismiss the Fed chair for raising interest rates. I think there's another issue, Sarah and Carl, worth talking about, which is this. Let's say that Powell told the markets on Wednesday that it was no longer sort of standing behind, that there was this removal of the perceived Fed put. Is Mnuchin coming in there and replacing the Fed put with a Treasury put? And, you know, I guess if it's his estimation that that's needed, that's really his call right there. The means by which he does that, it's unclear to me because as far as I can tell, the Federal Reserve is the only one with the means to come in and provide emergency liquidity. I suppose there are some funds out there with Treasury, but typically it would be something done by the Federal Reserve, either by cutting interest rates or providing lending at the discount window.
Right. Finally, that does bring us to an interview with Williams on Friday, Steve, and the very short rally we got subsequent to that. Sarah this morning brought up the turnover in voting members that we'll get next year. Does the picture change to a large degree?
I don't really think so. I think you lose one hawk, you get another hawk. But I think, you know, maybe I'm sure Sarah's aware of this, is that, you know, the Fed itself has changed a bit. You've had doves who have become quite a bit hawkish as the idea of the requirement or the need in the economy for emergency Federal Reserve interest rates has really faded to the background. And that's not really the sense right now of many on the Federal Reserve. Guys like Williams himself, who was, you know, a preeminent dove when it went during the financial crisis, now pretty strong on the need for the Fed to get up there towards some form of neutral. That's where the Federal Reserve chairman is, and I think that's where the people are around. And the good news that I think the market ignores here is from the last statement and the last set of forecasts, the Fed is closer to being done than we thought on Tuesday, and certainly than it has been in any other rate hike cycle before, right? So we are at rates right now that were the bottom of previous cutting cycles. And now we're sort of near the top. If 2.8 is the central point of neutral, well, they do what? 1 or 2 from here, and they're done.
Yeah, I mean, that was my point. I think the Fed's going to be more flexible, to your point, to your
I think
interview
that's a
with
good
Williams.
word, Sarah. I like that
and to
word.
the new members who have shown flexibility before,
Right.
including Rosengren himself. Steve, thank you.
Yeah, sure.